Greetings from the Charter School Office. I'm Albert Bertram, the Finance Specialist for the office. So this document was last year a part of the annual report we put out at the regional board training. So this year we've broken this piece out separately due to the differing due dates for the finance piece versus the academics and the other one. So if you wanted to compare this to last year's, you could look at the annual report to look at this year compared to last year. In our office, we utilize this as a kind of a summary of the audit. So the thick 40, 50, 60 page audits are summarized into 4 pages or so. There's a couple calculations on here which I'll go over, and then I'll show you where some of the data is derived from on the audit as well. So we use this in our office, as I said, as a summary of the audit, and so this is one of the sources we use for renewal. So it's important to make sure that everyone's on the same page as far as where this information is from and what it is. So with that, we'll start the video, or start to jump into the main part of the video. So over here we have statement of net position. So this is these numbers are derived directly from the audit. So to show you that, we will look at total assets, which are 1,875,251. So we'll go to the audit. So here's the statement of net position. And then you can see all the assets, and then here's the total assets. So 1,875,251. So if you wanted to match up any of these numbers to the numbers on the sheet, I encourage you to do so. That's what it's here for. So we'll go back to the review sheet for a moment. So these numbers should match up to what's on the audit. Now it's important to note that ending net position is the June 30th, 2014 ending net position, and the previous net position is the June 30th, 2013 ending net position. So you'll actually see that the Three Oaks Academy increased from 2013 to 2014. So that lets you look at that from year to year, and you can compare that from audit review sheet to audit review sheet. So as we move down here, this is the area of the balance sheet. So these are general fund current assets, and over here we have general fund classifications. So I'll go back to the audit for a moment. So the balance sheet is 2 pages after the statement of net position. So 1, 2. Here's the balance sheet. Notice that there's other columns here. So stick to just the general fund column for this area of the review sheet. It is important to look at other funds, but for this part of the review sheet, we're just looking in the general fund. So here's the general fund assets. If we scroll down, here's the general fund classifications. So you'll see there's an unassigned one and a non-spendable prepaid. So we'll go back to the review sheet. So here again is the assets, and notice that the prepaids are 169,609, and then if we come over here, we'll see the spendable amount, of 169,609. So that matches up to the prepaids. Non-spendable are amounts that cannot be spent because they are either not in spendable form or are legally or contractually required to remain intact. So if you've prepaid something, you cannot spend it again. So that makes sense. Unassigned fund balance are amounts that are available for any purpose. These amounts are reported only in the general fund. Now these definitions that I hover over here briefly are available directly in the audit. These are defined in the audit. So if you want to know what those are, again, you can go look those up in the audit. As we scroll up, this box is the kind of a summary of the activity during the year. So there's the beginning general fund balance, total revenues, total expenditures, other financing sources, net change, and then the ending general fund balance. So this kind of summarizes the activity during the year from a broad perspective. Below that, we have a couple calculations. So the first one is general fund divided by revenue. So that takes the ending general fund, divides by total revenue, puts it in a percentage. General fund minus restricted divided by revenue. So if there was a restricted amount down here, it would subtract that out and then do the same calculation essentially. Excuse me. There is no restricted amount, which is why these are the same. Now general fund divided by expenditures takes the ending general fund divided by total expenditures. Now if you read the February 2015 state aid status update that had the governor's proposals on, or proposed budget information, you may have seen that the general fund divided by expenditures is one of the metrics used for financial incentives. So that's important to the state. Excuse me. The Charter School Office likes to see this number due to the fact that if the school does capital outlays, or if there's just seems to be more fluctuation in the expenditures than the revenues. Obviously, revenues will change with the account and that kind of thing. So it's important to look at both of these. There could be a large contribution in 1 year or two for revenue. So it's important to look at both of these, not just one. But the state had this specifically listed on their status update for February. So it's important to know that. And then ending general fund divided by beginning general fund takes the ending general fund balance, divides it by the beginning general fund balance. If it's above 100%, there was a positive net change, which there was in this case. If it's below 100%, then there was a negative net change, which there wasn't. But so that's what that signifies. So we'll scroll down. This area, these 4 boxes are kind of summarize the notes section of the audit, and the notes are included on page 4 of this review sheet. So we'll get to page 4 eventually, but just know that this is derived from page 4. So notes payable is associated with state aid notes. So this is the state aid note or other short-term borrowing area. Long-term debt would be associated with a revenue bond or any other type of financing for a building. That's usually a bond. It's usually a bond. And then over here, this is a lease. So usually a school either utilize a bonding method to finance a building or the leasing method to finance a building. So this is the leasing method utilized by Three Oaks Academy. So that's where this is derived from, and we'll get to that in the notes where it's actually listed. And then over here is the expressly stated amount that's stated in the audit for the management fees. Now this percentage of state aid down here takes the total management fees and then divides it by the total state aid down here. This isn't necessarily the contractual amount, that's the percentage contractual amount, though sometimes it does come out to be that amount, to match that amount. So just so you know. And then earned divided by fall 2013 takes the management fees and divides it by the fall 2013 count, which is the corresponding count to this fiscal year, which ending June 30th, 2014. So that's what that is. Down here we have our square footage. If this is incorrect, let us know. I think we had derived these from the contract. So if there's been a change that I didn't have in the paper copy, let me know and we'll update this. And they're all formulas, so we'll update things pretty quickly. So, but utilizing that square footage, we have revenues per square foot, expenses or total expenditures per square foot, and then the difference. So these you can compare from year to year to see if there's any changes in that in these calculations. Again, look for skewing if there's a larger revenue contribution or if there's a capital outlay of some sort. And then payment per square foot takes the lease payment, so the lease payment, and then divides that by the total square footage. And that's how that's derived. Now, if this school had bonded debt, so they used a bond to finance their building, I would calculate this utilizing the principal and interest payment on the bond, and then divide that by the square footage. And that's how I compare kind of the schools that utilize leasing versus the bonded debt method of financing their building. So for your reference, the $4 is below the Bay Mills schools average of $14. So Bay Mills charters 42 schools now, and our average is $14 for this amount here. So over here we have operations and maintenance per square foot. I'll bring up this formula for a second. So this takes the line item down here of operations and maintenance and divides that by the total square footage. So this came out to $8 for Three Oaks Academy. The average for the Bay Mills schools, which there's 42 schools again, was $19. So this is well below the average again for the Bay Mills schools. And then the square footage divided by fall 2013 takes the total square footage and divides it by that corresponding fall count. So this is something to compare from year to year as well, just as a metric to compare the space for students basically. So scrolling down to page 2, this is kind of a detailed breakdown of that box in the upper right hand corner of page 1. So this takes the June 30th, 2014 actual, compares it to the June 30th, 2013 actual, and then provides the difference between the two over here. So this lets you look at the last 2 audit years really well in side by side, and then calculates the difference. I think last year I did some percentage comparison, but I think I like this one better. So if you have any feedback, if you look at your previous annual report, let us know if you prefer one or the other, and we'll try to figure something out. But if you don't know what any of these things mean, I'll show you a quick trick. We'll use basic programs as an example since it's pretty important. I took the accounting manual and put it in Microsoft Word. This is Word 2013. If you come up to the upper right hand corner, you'll see the Find button. If you push that, or you can hold Control and push F, you can come up. That will bring up your navigation bar. Type in what you're looking for. Make sure you're on Results, and then just click down here, and this will kind of search this document for what you're looking for. So if you want to know what basic programs are, you can see the accounting code is 110, and then basic programs are instructional activities including enrichment designed primarily to prepare pupils for activities as citizens, family members, and workers, as contrasted with programs designed to improve or overcome physical, mental, social, and or emotional handicaps. So I won't keep reading to you, but if you wanted to scroll down, you could see that there's the other codes underneath that 11X code. So you could kind of break things out and understand what everything is. This is just a good tool to learn what everything is pretty quickly. So if you don't know what something is, we can find it for you quick, or I'm sure someone at school level can help you too. So that's just what. So if you don't know what something is, let us know. We'll find it for you. It's important to know what everything is down here. Every line item is. So then again, this should match up to that box in the upper right hand corner, the ending general fund balance and stuff. So moving down to the general fund budgetary comparison, these numbers are derived from the audit. So this budget difference takes the difference between the actual and the final, and then the percent change is the percent change between the actual and the final. So if you notice this note here, it says the original budget is due July 1, which is well before the count date and before the school year, so it's kind of difficult in some cases to get a good accurate budget in the original budget. So there's usually a large discrepancy between the original and final, and you kind of see that here. There's a vast difference between the final and the original, and then actually between the final and the actual there's a difference. So just something to note and remember when we're looking at these budgetary comparison numbers. So below that we have the instruction percent of revenues, which I'll show you what that is. Move up here for a moment again. That takes the total instruction and then divides it by total revenues. So this is kind of a proportional percentage. So you'll notice that it was 43, then 44, and it dropped to 41. So that may, at first glance, it may look as a negative. So let's scroll back up for a moment. You'll actually see that instruction expenditures increased by $48,000 from 2013 to 2014. So that decrease in that percentage is not a decrease in the expenditures, it's a decrease in the proportion of total revenues compared to total instruction. So it's important to understand that relationship and know what that metric is portraying. So an example of something that could also impact this, a real example at school level, is if you have a teacher that's getting paid $50,000 and he or she retires or resigns or whatever, and then a new teacher is hired for $30,000, he or she is not necessarily providing less instruction, and the school itself is not providing less instruction, but those expenditures would decrease as a result of that situation happening. So it's important to understand the relationship, and if there is a decline or an increase, ask why that's happening. So I just showed you also that it's just a proportional thing too, so there was more revenues increased at a faster pace than did instruction expenditures. So it's not always a negative indicator if it decreased. So let me know what's going on, or excuse me, just to let you know what's going on. I wanted to make sure I was pretty clear about what that was stating. And as a reference, June 30th, 2014, the average for the Bay Mill schools, the 42 schools, this was 44%. Just in case anyone was curious about that. So over here we have revenues divided by fall 2013, and then expenditures divided by fall 2013. So this takes the total revenues and expenditures, divides it by that fall count, then the difference. So this is something that you could look at from year to year and compare. Is there a large discrepancy in one of them? Was there a large contribution in the revenues, or was there a large capital outlay in the expenditures? So it's another example to look for an indicator to see a change in what's going on. So we'll scroll down to page 3. This is the enrollment page. These numbers I just highlighted are derived from CEPI, which there's so many acronyms in education. I will explain what CEPI means. CEPI stands for the Center for Educational Performance and Information. It's a state-operated website. If you're looking for the account information or other good data, come down to My School Data, go through a couple filters, and then you'll get to this page and you can see the student count information there's a lot of spreadsheets here. It goes down to 91, 92 actually. So you could, if you wanted to see free and reduced lunch, special education counts, or grad and dropout rates, whatever you want to look at, there's a lot of good data here. So for those who are data miners, I've dug that data out for you, and that's where this is derived from. So that's where these are from. So if you notice the last one I didn't highlight, this is actually an unaudited count I received through Epicenter, which Epicenter is the file exchange program between the charter school office and the academy. So when we request documents, the system pulls, or it's just uploaded on the system, and then we see it through the system and timestamps everything and stuff. So that's what that is. And then the form that was actually submitted is called a DS 4061 form. That's the unaudited account information. So that's where this number is derived from. So it's unaudited. If the audited numbers change, this number is subject to change. So if you're looking at this, so when next year rolls around, if you're looking at this sheet and you say, why did this number change? That is why this number changed, just so you know. So over here we have our percent change from count to count. So this is for our numbers people who like to see the numeric display of what's going on with the count data. Excuse me. So that's what's going on over here, and below that we have our graphical display of the data, so you could see the count data from over here displayed in a graph for our visual people. So hopefully everyone's happy seeing the numbers and the visual stuff. So as we scroll down, free and reduced lunch counts, these are all derived from CEPI. Again, they're usually a year behind, they're usually kind of delayed, so that's why I only have 2013, but still worth noting. So these percentages over here take the free and reduced lunch count and divide it by the total fall count, and then it's put in a percentage, and that's where these are calculated from. So you see that this is almost 100% at the end, so it definitely meets the mission of Bay Mills Community College, so charter school office. So, and then below that we have our graphical display of the free and reduced lunch counts from over here. So we'll move down to page 4. This is the notes section. So this is not my words, this is the auditor's words. So the debt section takes the anything associated with debt. So notes payable, which the reference page 29 is actually the audit page 29, and then the building lease page 31. So these are again from the audit, and you can go look those up if you wanted to. So here's the building lease amount that we talked about on page 1. So scrolling down a little bit, the management company information, this is the management information utilized in the box on page 1 as well. Page 30, you can go look that stuff up if you're interested. And then below that we have, if there were any findings, they would have been listed here. There were no findings, which is good. I think I stated already that Bay Mills authorizes 42 schools, and out of the 42 schools there was 8 total findings. 4 of those findings were related to small schools just being small in size and not having enough staff to segregate all the duties. So that's kind of so 4 of them are related to that, and then the other 4 were corrected. So we're hoping to have a clean sweep next year, but overall schools have been doing good, so kudos to you guys for not having any findings. And then below that, just BMCC notes, or just anything else from the audit that BMCC would probably find relevance in or thought was worth noting. So page 7 and page 11, you can read those. They're just quick little excerpts. This document is reviewed by Mariah Wanick in our office, and my contact information is albertb@bmcc.edu. We hope you enjoyed the delivery method, and we thank you for all you do for the children of Michigan. Have a good one. Take care. Bye.